This is Damon Stevens. The film below today is Sunday. It's October 2nd, 2022, and the stock market prep for the week, as well as a review of last week. And hopefully, you made out all right last quarter. If you didn't last month, hopefully you'll have a better quarter this time around. But let's get right into it. A lot of interesting information going on floating out there. It's important to be prepared. So let's get you all ready for this new month. All right, so looking at last week, let's just recap Friday. So Dow Jones was down 500 points, so 1.71%. NASDAQ was down 1.51%. S&P 500 down 1.51%. Red, pretty much close across the board, except for real estate did okay. But a lot of money selling out, lots of money going on the side. You can see from our scanner, too, that we really don't have any small caps or anything else that we hit or that we took advantage of. Looking at the S&P 500, even in futures, let's take a look at this. So we broke a critical support level on Friday and closed on a new low below the 200-day moving average on a weekly basis, which is what we were hoping to be able to hold. So continue to see a weakness in the market. And you can see right here, the next level down is 3,500. At this 3,500, that's kind of where we had our last breakout back here in 2020. Where we kind of consolidated and broke out. That would be the next level I could see possibly being support. I do have levels below that, but 3,500 is the last breakout point. So looking for some hopefully support around 3,500 on the E-mini futures here going forward, since we're now hitting that weakness. That would also put us right here at the bottom of our deviation bands, where also we'd hopefully find support here on this third band. So looking for potential to hit that this week. And looking at the S&P 500 stocks, everything that's made up in the stocks market or in the stocks for the S&P 500, the 50-day moving average. If you're over a 50-day moving average, typically, it's considered bullish. Under the 50 days, considered bearish. And if you look right now here, back in June, when we hit our low, there was less than 1% of companies over the 50-day moving average. When we go back a little bit further here, 2020, so the pandemic was the last time we're down at this level as well. So we're down at pandemic lows right now, as far as companies, really being bearish right now. So you can see here, we've been hovering now, basically over a week down in these lows. And we're just hovering here around this 2% of companies still bullish. You can see back here, we've hovered down there about similar days, about 7 days before we bounced up and started to have a little bit of rally. Can we get that, on the S&P 500? It's possible, but, we've never been this low. I mean, we've rarely ever been this low right now. So, it's possible we could hover down here and even maybe be lower and basically have 100% of companies below. But we don't have really far to go right now. Especially since, back in August, just, a month and a half ago, we were higher than we'd been ever. So quite a contrasting difference where we're sitting now versus where we were a while ago. Looking on a monthly chart for the E-mini futures right now, this is 2006. This was the run up to the peak here into the end of 2007. And here's a drop to 2008. So 2008, kind of hit our 20-day moving average, consolidated down there for, a couple months, fell down to the 50-day, and then boom, just collapsed. And that was, this fallout here. And if you look at, where we were at back in 2000, this nice huge rally we had coming out of the pandemic, we hit this peak here in January 2022. And since then, we've kept falling down, and we're now sitting around this 20-day, 20-month moving average here. And then here's the 50 down here at, around 3,100, or basically 30.55. So the question is, if we can't hold this and we break this like we did back in the 2008 series, are we going to come back here and visit that similar area? And if so, that at least gives you an indication that, we have another $600 drop on the S&P 500. To come down here and hit this next bottom here. So that's going to be quite a sell-off. It's going to create a lot of fear and panic in the market if that happens. But we're at a kind of a critical spot right now. Now, also the Feds, aren't helping right now. They said that they're not going to retreat from their current plan to continue jacking up interest rates to try to get the economy back where they want it to be. But if they continue doing that, at some point, there's a tipping point. And if you're not real careful and you hit that tipping point, you create that big flush down. And that's what we got to be concerned about. And obviously I don't think we like to repeat history, but history seems to find a way of repeating itself. So just something to be careful about. If you look here too, since 2000, we've never had more institutions shorting the market. And you see here, we're just at a massive amount of shorts in the market. So everybody's hedging and feeling that we're going a lot lower in the S&P 500 in the marketplace. So a lot of bearish feelings out there. But here's the thing too that we have going on, though. We have mid-year elections. We have politicians wanting to be reelected and to stay in their position. So, how well does that work if the economy's tanked and stocks are tanked? People don't have money that they think that everybody thinks that they have. What happens? So that's one thing to consider here. Going forward. And here's typically what happens mid-year terms. You can see here in October, you have this little peak in October, and then September falls off. October kind of peaks in the middle, which is going to actually correspond with the Fed's next announcement on inflation, and then it falls sharply off through November, and then you start to get a rally back up here through November, end of November, and through December, end of the year. You have this nice little rally, and you can see that's pretty consistent. It's happened quite, pretty much overall since 1946, quite often. So the question is really, does our October, fall off here in, towards the end of October, and then November start to get this rally? Do we follow the same kind of direction that the market has in average, or is it something different? So just something to consider here as you're looking at, what's the near term versus longer term, or at least through the end of the year. So looking at the calendar and looking at what's coming up here on Monday, we have PMI coming out and manufacturing index coming out and construction on Monday. We have job openings, right? Factory orders on Tuesday, employment reports, pending home sales and PMI on Wednesday, Thursday, initial jobs claims, and then Friday, probably more critical, non-farm payrolls, unemployment rates. As long as this continues to remain strong, then more likely the Fed's are going to stay on their path to continue raising interest rates. So, there's really got to be, they really got to see a turn in the inflation rates coming down before the Feds are probably going to step in and do something different, even with mid-year elections going on. So just something to consider. Anything could change. But so far I've not seen anything showing that there's a potential change. So that's something just to be aware of. The other thing too that you can look at is you look at how your corporate bonds now, came to a new low here. And it's kind of where you can see where we had resistance here, which, became support, or should be support, back in October 2018. And you see kind of where we kind of bounced out of it here in 2020 after that pandemic hit. And we're right down here in this little zone here. So that was June low, and now we're down here and actually tagged right below this what was a resistance line, should have been support. It spiked back up. So we're kind of in this critical zone. If we don't bounce out of here and we fall, then we could possibly fall down here, which, is really going to hurt a lot of companies. And if you look at the TLT, the treasury bonds, 20-year treasury, this, typically would be, a huge area of support right at above this, because this was a huge area of resistance, and we just kind of blew right through it. Now we're at the bottom of that area, and now we're back into this level of support back in October of 2012, just to give you an idea. So now 2012 highs is where we're at on our lows coming in. So again, doesn't look really well for the economy. Doesn't look well for a lot of companies right now. In fact, the challenge is, do we end up in a situation with 2008 where we have banks in crisis mode and having to get bailouts, even though the economy supposedly looks very well and strong. So just something to be aware of here as we're getting into the market, and kind of looking, just kind of like, what is the picture that the market is at least showing, and how are they viewing everything. If you haven't subscribed, definitely subscribe to our channel, continue likes, and we'll continue to bring these videos to you. We're just trying to share education, information, and help us as we try to navigate the marketplace in the world of finance. So hopefully you'll join us. We do have a website, finwealthlive.com, and on there we have a link here. You can click for a free non-member chat and daily watch list. And if you do want to join us as a member, we have a lot of additional services. Here's the dashboard you actually have. You have access to live trading, training courses. We have a masterclass out there, as well as several techniques and courses that they go over different methods of trading in the marketplace. So if you're new to trading and you're trying to figure out, what's your technique or what's your method of trading, because there's hundreds of ways to trade this market, that's a great way to start. We also have group training and one-on-ones. One of the things we did, recently with one-on-ones is we were looking at, what people are using to trade with, whether they're using their mobile phone or their desktop, and just trying to find ways to help tweak the way that they trade a little bit to help them to make better decisions as they're navigating the market. Look at some stocks here, we're looking for ones that are healthy in a weak market, because that's where some opportunities could lie here. First Solar is one of those, but although we've been consolidating here quite a bit, so it kind of hit a peak here. We're looking to see, if we can get some momentum here to break through this 140, 141 area. If we don't, and we start breaking below the 20, which we started kind of showing a little bit signs of weakness, we could pull back and retrace back towards this 50-day moving average here at 119. So one of the things we're watching, just to see if First Solar has any more go in it. The other one is Netflix. Netflix just continues to be on a slow grind higher up this trend line. But it's coming up here. It's had resistance here under the 50-day and the 100-day moving averages. Here's the 100-day on the blue line. But hopefully, because it's sloping down and the market continues to grind up, and get above that and work our way back towards the 200-day moving average around 297. Amazon was holding it, broke the trend line here back, end of September, and now hovering down here in this little zone of consolidation. And if it does break this, 113 level, it could come back into this zone down here. And you can see there was a lot of time spent here with the market in this area, including the lows here at 101, 43 and 101.26. So that would be an area, hopefully it would be support. But if we do start seeing a big sell-off, that would be the next area of support I think we're going to see. But you can see right now, we're just kind of range bound right now in this little tight zone. Tesla has been kind of up and down in this little zone here, basically between, 265 and 314. But, Friday, it closed lower than it has, since basically in July, which means, we could be breaking down into this next zone, which could take us down, to this 233 area. So that's something watching definitely. If we close and break below this line, more likely we're going to come see that lower area of 233, and then we might get stuck in this zone here next. So looking for Tesla to see if it can bounce and stay in this current zone that's been bouncing, and really this is good trading opportunities as well. If you can, once you see a stock start to get into a range, and it gets range bound, you can usually buy the top, right? Sell to the bottom, and then buy the bottoms, sell to the top, and just kind of go back and forth, shorting it and going along on the market, as long as you're just paying attention to these levels. And also make sure if it does breach, that you're ready to get out if you happen to be on the opposite side. So right now in Tesla, I would not be buying this until I have a confirmation that we're actually going to rally, because we're right at a threshold and a low that we haven't been at, which means we could be breaking through. So just something to be careful about. But definitely, where you can find opportunities when a market's kind of flat or appears flat, there's still opportunities to make some money on a range trade. On Apple, this is looking at a weekly chart because daily charts are not doing well as far as will show levels where we're at. So now we're going to weekly and sometimes monthly now. So that just kind of tells you how bad the market is right now. Apple, again, down here towards this lower trend line and kind of broke right below it. And we're actually, right here at the support line at, this 137 area. If we break down, next area down is going to be this 129. This is that last pivot. And also will be below this third deviation band, heading down towards the 200-day moving average. Now that we broke the 100. So really got to get the support on this pivot. If we don't, which also you can see here, that's kind of where we had support back in August 2020. So again, critical levels, this is the next critical levels being hit. And it wouldn't take much to trip the algos to start selling off massively. So just something to be careful of. NVIDIA on a weekly closed still right on this trend lines. And here you can see the pivots were 2019 and 2020. And so it's sitting right here. So again, NVIDIA is at a critical spot. Because if it does break this level, and I didn't put this line on yet, this would be the next line to visit, which is be 7150 area. And that's where this pivot comes from back in 2018 would be our possible next level support. So you can see, if you're holding long and you've not taken profits out or what have you, you could have a long journey back. But the one thing also on the positive side is you have a great opportunity to accumulate at a discount. Because a lot of these stocks have really been discounted. I mean, look at NVIDIA was at $346. Now it's down to about $116. So it's down, considerably. And if it comes down to $71, there's these got to be bargain prices for these stocks, especially when you've lost that many years of value. So just something to be aware of as we're breaking through here. Right? NVIDIA, critical support level. Looking at the bonds, 10-year bonds, made this huge high, kind of hit the top of our third deviation band, pulled back here to support off the 20-day, still above this old high, and just kind of hovering right here in the middle. So it's kind of hard if you're not already in this 10-year yield to hold this, but as long as the 10-year yields are high on these bonds, market's going to continue to pull back. 2-year yield, you can see also it's in the zone or in a range here, basically between 4.1 and this 4.37. So we might be range bound here for a little bit. If we do break this, it could come back down to 20. But again, 2-year yield still very, very strong and very elevated, which does not help for the market. The dollar hit this peak for 3 days, is riding up on the third deviation band, which it hadn't done for a long time, and it's pulled back here. Didn't quite come back to the 20, almost down to the top of this our old trend line. So it could check at the trend line here and bounce, or the 20 could come up and meet it, and it could bounce and continue going higher. But the dollar is still very elevated, not as elevated as it was. I was expecting this could possibly hit 120, and maybe it still can. But at least right now, the dollar's pulled back a little bit. Anything like that's going to help the market try to at least consolidate and try to find some direction. And obviously, when the dollar pulls back, gold gets a chance to run. And gold actually did get tagged the 20-day moving average. It did pull back here. And so it's kind of, hovering around the 1660. We really need to get, above this, 1680, really to try to run the bull back up to the 50-day moving average. So we'll see. It's kind of, trying to keep that momentum going. We'll see if it can continue on this week. But right now, at least gold finally got a bounce and it's sitting right kind of at this support area and resistance area. And that was based on its old range here. And I'll just put a line up here so you can see. So this is the old range here. So you can see here how we just kind of had this bear flag and then fell down and then found support, bounced up, and now we're just kind of hovering right on that line between the bears and the bulls. So we'll see what happens, but right now gold's sitting flat, but at least it's off the lows. VIX spiked up here towards 35, Now it's just kind of, chopping here, and that's creating a lot of volatility in the market. As long as the VIX is up there around 30 and not getting that back down towards 25, it's going to be a volatile market out there, and it's going to be hard for the market to rally at all. If not, if we get break above 35, you can expect the market to come down to new lows again. And we did hit a new low on Friday. Here's the S&P 500 on a daily chart, down to new lows. And so in that next support down here on our deviation bands, on the secondary one, it's going to be, this around 340 area, or that's 3,400 on the S&P SPX. But you can see my next line down here is at 329 for support. So we are showing weakness. We are in downward momentum. So just be careful out there. Looking at on a weekly basis, we also broke that 200. We talked about that already. So our next, again, line down here is around 350, 348, 350 area. So looking for potential move down there this week. For monthly, we talked about how critical this was over the last few weeks, not to break this 50-day moving average. Otherwise, again, if we come down to 100, now we're talking about 304. So again, now that we've breached that, how low can we go? You can see back here in April of 2020, we broke, briefly below the third deviation band and then bounced back out, and that's where we started to rally back up. So do we come back down and breach this again? It's possible. So we'll have to see over this next, coming weeks on what happens. But market's still, again, on a downward trend. Triple Qs on daily, you can see here, right down here towards these lows. Right now here, breaking the lows. So triple Qs in the same boat. Putting new lows in means it has more downside that it can go. And that was selling on some pretty high volume as well. So that means money's flowing out of the market and flowing elsewhere. On a monthly basis, we broke the 50-day moving average also on the triple Qs. So again, once you break the triple Qs and we break that support line, the 200-day is clear down here at 150, which that's a considerable drop. And obviously we could hit the 100 here first. There's which sitting around here 213, but again, we have a long way to drop here. You can see here the bands for deviation bands before we hit down to the lows. So the next one down really is this 243. So that'll be the next area of support if we do break this level here. Which the reason I have this line here is this kind of was a zone here of consolidation before we broke out to the highs, and so we could become range bound here in this area for a while. But if the market continues to remain weak, it might just decide to blow through this and come down here. So the next level down, if you're looking for areas of possible, major support, is you look for these range areas. And so you can see this would be the next range area down here towards the bottom deviation bands. And so that's where I was looking for this to be support, maybe acting as support this week. But if we break it and breach it, just look for, a huge drop down to the next area. IWM on a daily basis, sitting here, it hasn't hit the new lows, but it's hovering down there in this area. So 161.94 where we're in June, and so Russell 2000 is trying to hold on, and stay above that, which is good for the overall market. But again, without a rally, it'd be hard for those small caps and to give us a run. Looking at on the monthly chart, you can see again we are at lower weekly lows, our monthly lows here. 164.49 is kind of where we had this resistance area before, and we're sitting right there. And you can see we had back here in January 2020, we also had resistance there, which means that these two areas were support, and they're right here. So if we break this deviation band and these areas of support, then obviously we could come down here and retest down towards this 100, which would be our lower deviation band as well. So that would, then you're looking at the range around 150 if we come down that low. So just something to be aware of. We're at a critical spot really for the market possibly to accelerate a move downward if we don't get some kind of a bounce. On the financial side, again, showing weakness. Now it's curling down and flattening, which, gives us an idea that, it could possibly be reaching a bottom support area, and maybe becomes even range bound. And you see here, these prior lows were, around June and July, around $30, and we're just kind of hovering right at that level. So as long as we don't break below these candles, that's an area of support where we could possibly make a bounce. But if we do breach below these levels, or even 30, it's a long way down. Now you're looking at 28. And if we do that, then again, it's not going to look really great, unless you were buying. If you're looking to buy for your long-term portfolio, if we breach those areas, or you're contributing in 401ks or IRAs, a great time to get in, because you're getting things at a huge discount and bargain. But if you're still in 100%, you just have a lot of pain to go through. And that's why, especially if you're day trading or swing trading, and you're not just holding long-term, your long-term portfolio, just be aware of these levels, either breaking to the upside or downside. But right now, obviously, very bearish, very much at a critical level of support. If we breach it, you can look for some acceleration to the downside. If we can get a relief bounce, we've got one before. We had one back here in August, and then we pulled back, and then we had another one here in September. So, do we get another one in October? It's possible. If we do, you just got to be aware of, where that support, the line comes in here. And if you take, if we even draw a line here, you can see this could be a possible wedge here that we could go into, which means, next resistance area is going to be around 32.61 area. If we were to bounce up here, it's possible we could bounce up and bounce it down again, very similar to what we've done the last few months. So just something to be aware of, that there is a way to get, a short-term rally, but possibly not a long-term rally here in the near term. On the financial side, XLF on a monthly basis, again, we tagged that 50-day moving average. We've been down there 3 times now. And the more we do that, the more likely we're going to see that weakness and a breakthrough. Now you see that, again, looking back here in January 2018, and again in February 2020, those should be support areas, and we're coming right into them to test them. So if we can hold those on a monthly basis, we could start to rally off of this. But again, still, obviously, everything's to the downside, so something to be aware of. Looking at Bitcoin. Bitcoin's just trying to hold above this trend line. You see we have this trend line, it just kind of sits there and kind of hovers around it. We really got to break above this 20-day moving average. It's got to get over this 19,000 and hold it, over 19.5, really to run back up. So right now, you can see again the trend is down and flat. And if it continues to be flat, Bitcoin will have a choice to make here sometime in October, either to the downside or to bust out of this and move to the upside. So we got a little bit of time to figure out which direction it wants to go, but it will reach an end and it will need to make a decision. Ethereum, same thing, just consolidating down here. You can see this wedge coming down here again. When it reaches, around October, between October, anywhere from October 10th to the 15th, which obviously is where the Feds are going to be speaking to us on the inflation and interest rates, then obviously there's going to be a move. So could get a bounce and break through this downward wedge, or it could come lower. So again, a lot of decisions, really important month in October, really to set the tone for this fourth quarter and what we're going to see through the rest of this year. So stay tuned, stay close. We'll lock in profits. If you're capturing some profits, make sure you lock them in and to continue to protect your money. As we go into this volatile area and the bears, and look for, if you're looking long term and you're making some small investments or making investments in, just be careful with how much you put in. This is not financial advice, but definitely, make sure that you're looking at the overall market and the overall, state of the economy and the world as you're investing. That way you make sure that you're making informed decisions on what you're doing with your money. And with that, we'll talk tomorrow night, see how your trades went. Again, join our Discord. We'll be posting out our watch list before the market opens with the levels of when we're getting in, when we're getting out, And if you find that helpful, we'd love to have you participate with us. And again, that's at finwealthlive.com. Until then, everybody have a great night. Have a great rest of the weekend.